Greater Bowie Chamber of Commerce presents the Bowie Business Journal, a program designed to keep our community informed about important business and economic issues.
Welcome to Bowie Business Journal. I'm Cindy Freland, host and co-producer. Today we have two special guests that are going to talk about year-end tax tips, and especially tips for small business owners, maybe home business owners, as well as corporations. So I'd like to welcome Larry Bormel. Welcome, Larry.
Thank you. Thanks for having me.
And Catherine Newman.
It's nice to be here. Thank you.
Nice to meet you. Thank you for coming. And Larry and Catherine are from Bormel, Grice and Huyett PA CPAs. Is that correct?
That's correct.
Wow, I'm glad I got that right.
You got it right.
Okay, welcome.
Thank you.
Larry, can you tell us a little bit about what you offer as a CPA?
I sure can. Bormel, Grice and Huyett is a full-service CPA firm. Our office is in Laurel, Maryland, and we provide accounting, auditing, tax and consulting services for businesses and for individuals in the Baltimore-Washington corridor.
Okay. And what about you, Catherine? Can you tell us a little bit about what you do?
I focus on real estate clients, professional service providers such as attorneys and physicians, other various small businesses, and retirement plans. And I do retirement plan audits, 5500, which is the annual reporting, and QuickBooks consulting.
Oh, QuickBooks. Okay, that's great. That's great. I use that myself. Yeah, I have a file folder of stuff that I haven't put in, so I'm going to be busy the next couple weeks.
You need to be on a month-to-month basis. You sit down once a month, you reconcile your bank account, enter everything, including credit card charges, and then you'll be good to go. Get your monthly statement.
You have the right program because QuickBooks is the most widely used small business program in the country. And we have several certified QuickBooks Pro advisors on our staff to help people with their QuickBooks issues.
Okay, great. Thank you. That's good to know that I have the best software for that.
You do.
Thank you. Larry, you are, what is your title?
Well, my title is President and CEO, and our firm, as I said, is based in Laurel, Maryland. We were founded in 1968.
Wow.
Now, before you start thinking that I'm that old, I joined the firm in 1978, so I have been there for 34 years.
Wow.
We have 3 partners and 22 accountants on staff.
Do you want to mention the partners?
Partners are Kathy Grice and Anna Hewitt, 2 women partners.
Okay, great. Lucky man.
I am.
Catherine, can you tell us a little bit about the Bowie Chamber of Commerce?
Okay, we've been members for a little over a year. I've attended a number of events, most recently the legislative breakfast. So I met the local legislators, state legislators, and the Chamber's committee chair. So they introduce you to the legislators, talk about what's been going on for recent legislation, and act as our representative with legislators. So they represent businesses and the interests of business people. I went to some of the Women in Business events. The annual event this fall was an all-day event, and I enjoyed that. I know the Women in Business promotes scholarships for women. I was at the presentation this year for scholarships to 2 women. The Business Development, which does the short subject seminars for business people. I enjoyed the one that you provided. And the thing I like best about it is the networking. The networking events where it's business people meeting business people. You get to know them individually. You gain referrals that way, and share common challenges and positives.
And how long have you been a member of the Chamber?
A little over a year for this
year.
Cindy, I'd like to add that we are really pleased to be now participating in the Bowie Chamber of Commerce, and in particular have Catherine as our representative for the Chamber. We've been involved in area chambers of commerce for our entire existence, our entire 44 years. We're strong believers in chambers of commerce in terms of supporting small business, and also for our business and for many others, the number one reason that people still get involved in chambers of commerce is for the networking opportunities. So we're really pleased to be involved in Bowie.
Right, okay, thank you for that. Yeah, I've been a member of the Bowie Chamber of Commerce for about 15 years, and I met a business owner at my very first event and kept in contact with him. I'm not going to say who it is, but he's a prominent person in Bowie and in Annapolis. So, but I met him at a very first chamber event and kept in contact with him for 3 years, and he gave me a project that allowed me to leave my full-time job of 25 years. Wow. So I'm very grateful to him for that and the chamber to connect me with him. So, but I do agree with you, Larry, that the best is the networking, and you have to participate. Business owners have to participate in the events and follow up, and that's a very important part of marketing your business. So is there anything else that you'd like to add about the chamber?
You know, I've thought recently about, as a person looks back over their business career, and in our case we do tax returns, financial statements, and as the decades go by, a lot of that becomes a blur, and some of the things that really stand out is things like involvement with the Chamber of Commerce because of the people that you meet, the information that you get, the places in the area that maybe you don't know about that you get exposure to, and all those things really stand out to make involvement in the Chamber of Commerce a really memorable experience.
Yeah, we have some great events coming up, and you do not have to be a member to join us. And the credits will be in the end of the show for Catherine and for Larry, and as well as for the chamber, in case you want to follow up with us later. The chamber is going to have a multi-chamber breakfast, networking breakfast, on this Friday, the 7th. It starts at 7:30 in the morning. It's at Comfort Inn. And as I said, you do not need to be a chamber member to join us. The next event is going to be the following Tuesday, I believe, which is the 11th, which is the Holiday Mixer, and that's at the Baysox Stadium. So all of that information will be at the end in the credits at the end of the show. So, okay, let's move on to the topic of the day, which is tax tips, business tax tips. Catherine, would you like to talk about what we were discussing earlier?
One of the main things that businesses don't think of is that if they're starting up, if they're new, that they can have retirement for their employees and for themselves. Or if it's a business that's been in operation for a while, they don't know the different types of retirement plans that are available, and they sometimes think that they can't afford it, or they think it's too complicated. And there are several types of plans. For just covering employees, that you want the employees and the business owners to contribute on their own, there is a payroll deduction IRA. It's very simple and straightforward. You fill out a form, the amounts are withheld from pay and transmitted to a financial institution. You can put up to $5,000 per year in there for each person. And it doesn't matter if everyone is able to contribute or not, so it's easy to set it up for those who are interested. Then there is a simple plan where you have employee contributions and employer contributions, so that if the business feels able to contribute on behalf of their employees, or if they want to contribute for the owners, then that is an option for them. And you contribute a little more to that. It's about $11,500 for 2012 and $12,000 for 2013. So it's also easy to set up. You fill out a form, take it to the financial institution, arrange with your payroll company for the withdrawals, and transmit to the banking institution, and then you have retirement for yourselves. There are traditional 401ks, which require you to cover everyone who is employed, is over age 21 and works at least 1,000 hours. And a 401k plan is more common these days, where you withhold from pay, and that reduces your taxable income by the amount that you withhold. You can put about $17,000 in 2012 and $17,500 in 2013. So you can go up to that amount, then the employer can match it, a certain percentage of compensation, or they can contribute a certain amount, not a match, to all employees. Then for a lot of small businesses will do a SEP plan where it is only an employer contribution, and that has the greatest benefit to business owners. You can contribute up to $50,000 or 25% of compensation, whichever is less. So for someone earning up to $200,000, they can put $50,000 in this year for their plan. And it's a good tax planning strategy because you can determine at the end of the year what cash you have available and make that contribution at the end of the year or shortly thereafter, as long as the plan is set up and you look to what your income is and what amount you can deduct.
Okay. Now, what is a SEP?
A SEP is a simplified employee pension.
Okay.
And it is, it's the most often used by smaller businesses, sole proprietors, some S corporations will have a SEP plan, and it's the most valuable to employers. You do have to have an annual report for that, and you do annual testing to look at the contributions of the owners versus employees to be sure that it is equitably allocated. Okay.
Let me jump in and add two things to that. One is, I know you're very interested in small businesses, home-based businesses, and what we'll do in the retirement plan area is we'll work with the client so they're not in the Cadillac plan right from the get-go. So in other words, someone who may be only able to put in up to $6,000 per year, perhaps a regular IRA, which is the simplest and less reporting requirements, is the most beneficial for them at that point. Then when they graduate to be able to put in more than that, perhaps in the $15,000 to $20,000 range, well then maybe we're looking at something like a SEP or a 401k plan. And then if they're really able to put in big dollars, $40,000, 30, 40, 50, then we're looking at other types of plans. So we kind of work with the small business in their life cycle of their business as to what they can afford. One other thing I want to add also is in terms of the pension contribution, one of the great things is that you don't necessarily have to make that pension contribution by the end of the year. You can make the pension contribution by the due date of the return, which is either, depending on the type of return, March 15th or April 15th, and even in most cases by the extended due date of the return. So you could be putting in your pension contribution for 2012 sometime before September 15th, 2013. So you can save taxes in 2012, but not have to actually put the outlay of money until later next year.
Okay, great. So let's say I'm a small business owner, home-based business owner, which I am, and I would be able to have an IRA, I would be able to have a 401k and a SEP plan all from by contacting you. You would be able to help me with those plans.
We could. You would only want to have one plan for each business. Okay. You're limited. Now there are exceptions. IRAs can be held by people who have plans with an employer, but there are wage limitations on that.
Okay. Okay, great. Thank you. Now, Larry, you mentioned February 15th and March 15th and April 15th. Can you expand on what the qualifications are,
Right.
who's due on certain dates?
Well, corporation tax returns are due on March 15th.
Corporations.
So if your business is a corporation, C corporation, S corporation, the tax returns are due March 15th, and then they could be extended to September 15th if need be. And if you are a partnership, a limited liability company, or a sole proprietorship, your tax returns are due April 15th, and those also could be extended as far as the business returns to September 15th and the individual returns to October 15th.
Okay, thank you.
So the retirement plans are something that can be done but not funded later, and that's very nice.
Okay, Larry, do you have any tax tips for small business owners, home-based in particular?
Sure. Well, you know, now that we're broadcasting this and filming this in December, a lot of people are thinking about how can I save money this year? How can I save money now? And there's really two categories of tax tips. And in the corporate world, and small business corporate, we're usually looking at several different tools to save someone money and reduce their taxable income at the end of the year. One, and I'll just briefly name 5. One is to defer income. A lot of businesses have the ability to not bill their November or December income until later in the year, so that they are receiving that for a cash basis business in January rather than December. So that income would not be reported in December, it would be reported next year. Another is to accelerate deductions. A lot of people are looking at what bills can I pay now, trying to anticipate what their January and February needs will be, and being able to spend that money and take the tax deductions before the end of the year. Third thing is capital expenditures. A lot of businesses are taking a look at what types of equipment that they need to purchase in the near future. And if they purchase that equipment before the end of the year, they can write it off before the end of the year. They can write it off in 2012. Now there's something called a Section 179 deduction, which allows you not to depreciate the equipment over a number of years, but to take it all as a deduction right away. And in 2012, that limit is you can buy up to $139,000 of equipment. That limitation is scheduled to go way down for 2013. So a lot of businesses are looking at their computer needs, their vehicle needs, things like that. The pension we already talked about. And then the fifth area would be, if you have profits, whether to bonus some of those profits out to your employees and to the owners of the business. Now, the owners of the business, the bonus has to be paid before the end of the year to get the deduction in this particular year. For the employees, you don't have to pay it until shortly after the end of the year. So those are 5 tips for corporations. There's also 5 more tips for small individual businesses, if I can.
Sure.
Just quickly to go over those. And this applies to anybody in business, either as an individual, sole proprietor, or as a LLC, a limited liability company. A couple of those things are what I call the 5 most overlooked or underutilized tax deductions. One is car expenses. A lot of people underutilize their car expense tax deduction, because if you're a typical household which would have, let's say, 2 cars, one of them is used for personal use. Maybe there's a husband and a wife in the household. One vehicle will be personal use. The other would be primarily a business use. And there's record-keeping requirements for keeping track of that. But we see all the time, people are not maximizing their auto expense deductions. Second would be meals and entertainment. We find that people are not maximizing their meals and entertainment deductions. So what are we talking about with meals and entertainment? We're talking about breakfast, lunch, dinner, going to a ball game, going to the theater, playing golf, whatever the meals and entertainment encompasses, as long as there's a primary business purpose. And what you need to do is keep track on your receipts of those different things. The third area would be business travel. A lot of people forget about the fact that trips that they take are often primarily motivated by business, and they're not maximizing the deductions that they need to take on that. So there's a whole strategy to be able to deduct as much of your travel as long as it's primarily for a business purpose. The fourth is electronics. Today, in this age of electronics, we all have iPads, iPods, iPhones, this, that, and they are often used for business. So we have to remember to be able to deduct those. And lastly, and I know this is something you're interested in, is the home office deduction. So home office deduction, a lot of people are afraid of it because they think, oh, if I claim a home office deduction, I'm going to get audited. Well, you might be in a slightly higher audit risk category, but if you're entitled to it, you absolutely should take the home office deduction. And to take the home office deduction, there are different tests you have to meet. The primary one is regular and exclusive use. So regular use means meeting with customers, clients, patients, whatever it may be, in the ordinary course of business. And exclusive means that it has to be exclusively used for business. So for example, I do a lot of work at night on my kitchen table. But guess what? It's a kitchen, so I can't claim that as business.
Right.
You have to have a separate room that's exclusively used for business.
Okay. Well, thank you. That was great. I really appreciate that. One thing that you mentioned is car expenses that's underutilized. There's a discrepancy where I've heard that you can use car expenses such as oil changes, maintenance, and things like that, but then I've also heard that you can only use mileage. Can you
Well, you have your
clarify
choice of whether you're going to use the standard mileage rate,
Okay.
which I believe will be 56.5 cents next year in 2013,
Okay.
or you could use actual expenses. So first thing you have to do is determine your business percentage use. So that use could be 80% of your vehicle could be business use. And then you have to determine what will be better for you to use the standard mileage. So for example, if you drove 10,000 business miles at 56.5 cents, that would be $5,650 deduction. Alternatively, the actual would include your gas, your repairs, your insurance, your registration, and depreciation of the vehicle as well. And so whatever those come up to, you take the business percentage, and that's the deduction. But there is one catch. You have to stick with the method you choose for the life of that vehicle. So if you decide that standard mileage is the best for you, you have to use that every year for as long as you have that vehicle. If you get a new car, then you have an opportunity to decide which method is better for that car.
Okay. Well, that's great. I didn't know that. Thank you very much.
Now, one thing that we have found that some clients will get audited from time to time, and IRS is pressing now to have people keep a contemporaneous record. So for business mileage, meals and entertainment, travel, you want to keep a written record of the mileage, the cost, who was entertained, where you were, the business purpose. And they're looking to see that you kept that record at the time. So with people using electronic devices to track their calendar, you want to, at the end of the year, find a way to download that information or print that information and save it elsewhere so that when you change phones, you don't lose it.
Oh, yes. Thank you for that, Catherine. I appreciate that. Larry, can you let us know if you have any, do you have any training courses or books or anything that you suggest?
Well, we have in our office I'll say a program. We have, it's a 2-hour session that we offer to new businesses. So when someone is contemplating starting a business or recently started a business, we think it's very beneficial for them to sit down with us and go over a number of topics, including the business form. Should they be a limited liability company versus a corporation, for example, to determine different things like the types of records they need to keep, whether they should be using QuickBooks or something else, tax identification numbers they will need. A lot of businesses not only need their federal tax identification number, but they also need a state unemployment number, a state withholding number, a sales tax number, and there could be other registrations. So we want to make sure they have all those registrations, and we talk to them about business planning and all sorts of things that they need to know when they start up a business. Also, if somebody's interested who's watching your show, we recently did a webinar on individual income tax tips, and it's a 30-minute webinar. You can access it on YouTube or on our company website just by punching in Bormel Grice. And you can watch it, and for 30 minutes and a box of popcorn, you have all kinds of tax savings ideas.
That's great. Anything additional, Catherine, that you would like to add?
Not really.
Okay. Larry, anything else that you'd like to add?
Well, you know, right now, as far as taxes, everybody knows that taxes are up in the air in terms of what the new tax laws will be. We're at the edge of this fiscal cliff. Will Congress act on it? And people really don't know what actions to take because they're not sure of what the tax law changes are going to be. So we're monitoring that very closely, and if they do nothing, we're prepared to advise our clients one way, and we're also prepared to advise them based on whatever actions Congress may take. And so we're all sitting here holding our breath, waiting to see what's going to happen.
Okay, thank you.
Now,
Catherine, we're going to have to wrap. I'm sorry.
Okay.
Catherine Newman and Larry Bormel of Bormel, Grice and Huyett. Thank you very much for joining us.
Thank you.
I'm Cindy Freland, and thank you for joining us on Bowie Business Journal.